Hello, welcome to my channel. My name is James, and I want to share with you the worst economic collapse in the United States. The United States economy is facing a crisis like never before. Inflation is rising, interest rates are unpredictable, and global trade tensions are shaking financial markets. But is this just another downturn, or are we heading towards the worst economic collapse in the history? In this video, I will break down the warning signs and show you how to prepare. Watch to the end. Hit the subscription button right now so that you can be able to see some of my financial insights.
Stocks are down today largely because of the tariff situation that we have going on, and you combine that with a University of Michigan consumer confidence survey that came out that showed that inflation expectations have risen both in the short term and in the long term. From a 1 year perspective, expectations are for inflation to be at 5%. And when we look out 5 years, the expectations are for inflation to be 4.1%. Now, that 5 year number is as high as it's been in 32 years. And so that has the market a bit.
Before we talk about solutions, let's break down why the United States economy is in serious trouble. 1. Inflation and interest rate uncertainty. Inflation remains above 3%, making everyday goods more expensive. The Federal Reserve has paused rate cuts, keeping borrowing costs high. Take for instance, rising mortgage rates are making homeowners unaffordable for millions.
Average rate on a 30-year mortgage in the U.S. rose for the second week in a row to its highest level since mid-July. These higher mortgage rates and rising home prices are keeping homeownership out of reach for many.
2. Stock market volatility. Investors are pulling out of risky assets, causing market instability. Uncertainty in policies is shaking investor confidence. Take for instance, the S&P 500 has seen extreme fluctuations due to unpredictable economic policies. A. Government layoffs and spending cuts. Federal workforce reductions are slowing job growth. Budget cuts are affecting public services and the infrastructure projects. For example, the government has reduced spending on key sectors, leading to economic stagnation.
Spending by the federal government dropped over 5% in Q1 of 2025, and some of that drop in spending may have something to do with the fact that the Treasury was finally able to put a stop to a decades-long practice of sending out untraceable, unlabeled payments.
4. Global trade wars and the tariffs. The United States has imposed aggressive tariffs, leading to higher consumer prices. Trade restrictions are hurting American businesses. Take for instance, tariffs on imports from China have led to retaliatory measures, worsening the economic outlook.
We're entering a very new era here. And so depending on how severe geopolitics and the trade wars get going forward, they're going to start looking at these levers more seriously. Obviously, one of the big ones is fiscal spending. They don't want to do a bazooka.
5. Rising national debt. The United States nation's debt has reached record levels, putting pressure on the economy. High debt levels reduce the government's ability to respond to crises. Take, for instance, the debt ceiling debate has created uncertainty in financial markets.
For the first time in history, Moody's downgraded the credit rating for US debt. It has sparked long-term bond yields to rise to their highest level since 2008. Moody's predict that the US deficit will rise to 9% of GDP by 2035. This is really unprecedented for peacetime.
Which economic factor worries you most? Drop a comment below. How can the United States face this crisis? Despite the challenges, there are solutions to stabilize the economy. 1. Smart trade policies. Reducing extreme tariff can lower costs for businesses and the consumers. Negotiating fair trade agreements can boost exports and stabilize supply chains. Take, for instance, a balanced trade policy could help restore economic stability. 2. Federal Reserve adjustments. Lowering interest rates can stimulate economic growth. The government should balance inflation control with economic expansion. Take, for instance, a well-managed monetary policy could prevent further economic decline. Thirdly, job market strengthening. Investing in public sector jobs can boost employment and spending. Government-backed job program can support economic recovery. Take, for instance, infrastructure projects could create millions of jobs and they stimulate growth. 4. Market stability measures. Clear economic policies can restore investor confidence. Transparent regulations and predictable fiscal policies can reduce volatility. Take, for instance, a stable policy environment encourages long-term investment. 5. Encouraging small business growth. Supporting entrepreneurs can drive innovation and job creation. Tax incentives and funding for startups and small businesses. Say, for instance, small businesses are the backbone of the economy and they need support to thrive. Do you think these solutions will work? Let's discuss in the comment section. Now, how to protect your money during a crisis. If the economy is struggling, how can you safeguard your finances? 1. Diversify investments. Don't rely on just stocks. Consider real estate, commodities, and bonds. Diversification reduces risk and protects wealth. Take, for instance, gold and silver have historically performed well during economic downturns. 2. Build an emergency fund. Keep 6 to 12 months of expenses saved for financial security. An emergency fund protects against unexpected financial shocks. Take, for instance, many people lost jobs in previous recessions but survived with savings. 3. Reduce debts. High interest debt can hurt you during economic downturns. Paying off debt reduces financial stress. Take, for instance, credit card debt can become unmanageable if interest rates rise. Stay informed. Follow economic trends and adjust your financial strategy accordingly. Knowledge is power. Stay updated on market conditions. For example, investors who predicted inflation risk moved into commodities before prices surged. Want more financial survival tips? Subscribe for updates. So, as earlier said, the United States economy is facing challenges, but smart strategies can help us navigate the crisis. Stay informed. Knowledge is power. Take action. Protect your finances now. Subscribe for more insights.